Okay, good evening, everybody. I think we are up. I think I was just having an issue with my chat. But good evening. It is Monday. So happy Monday, everybody. It is May 9th, 2022. It's going to be a shorter than normal stream. Starting a little bit late today, I did have to end work a little bit later. So I was doing a lot of stuff for work, but I wanted to stream because we have some interesting news out of Goldman Sachs today, and it almost seems a little bit like deja vu because we've been talking about all of the frothy, speculative activity on Wall Street in relation to the SPAC market or the special purpose acquisition market for quite some time, especially about a year, 6 months to a year ago, when it seemed like everybody and their mother was forcing everybody to buy these special purpose acquisition companies. It was all over CNBC, it was all over Twitter, it was all over TikTok, and all this nonsense about buying all these special purpose acquisition companies are the best thing ever. And if you guys remember correctly, we've been warning about stay away from these SPACs because not only are they probably poorly underwritten, one of the biggest criticisms that we've made on the channel about these SPACs were that probably the financial forecasting and the projection methods about the financials of these underlying companies are probably either falsified or outright fraudulent. But that is all alleged. So breaking news across the terminal today: Goldman Sachs is exiting its SPAC business amid regulatory crackdown and market turmoil. So this always happens. Usually regulatory agencies, including the SEC, usually tends to step in after the mess has exploded. The same thing that happened in 2008 with a lot of these collateralized debt obligations that people were selling back and forth on Wall Street, all of these toxic derivatives products that blew up and lost investors millions and millions, if not billions of dollars. We're seeing the same thing with the SPACs, and we've been writing about it. It seems a little bit weird because it's almost like if anybody knew just the littlest thing about finance, you could see this from a mile away. But essentially, the SEC is, in March, they're coming out with new frameworks around underwriting practices and liability practices in relation to SPACs. So one of the very lucrative things for a lot of these investment banks when it comes to SPACs is they have no liability whatsoever from investors. So they can bring about these companies public, they can sell these SPACs to investors, but if investors lose money, well, they have no liability whatsoever. So in March, the SEC has put down some additional regulatory clarity in relation to SPACs, with the potential to have more liability on these major investment banks. And that is probably why Goldman Sachs is pulling out of the market altogether, because they just want to be able to sell people these companies, but they don't want to have any liability or legal liability, I should say, should these things blow up and lose investors' money, which they have been pretty much all year. So if you type !SPAC, S-P-A-C, SPAC in the chat, !SPAC, the Nightbot will drop the link to the article where it outlines why Goldman Sachs is leaving the SPAC market. Let's see who we have in the chat. Bart is here. Welcome, Bart. Sally is here. Michelle K is here. Good evening, Michelle K. Good to see you. Carson says, evening, everybody. What's up, Carson? Good to see you. Dianca says, hello, happy Monday. NMB045 says, hey, Tom, what's going on with Bitcoin? I think Bitcoin is headed for its 200-week moving average, which is right around probably 27,000. If you follow us on Twitter at Walks Wall Street, you will see a lot of my projections and things like that. Marcus is here. Welcome. Ryan Royal says, hey, Tom and everybody. It looks like a beautiful yet windy night in New York City. It's a crazy night in New York City. The wind is brutal. Joseph is here. Welcome, Joseph. Good afternoon. The Pond Viewer 12 says, I wonder if Ken Griffin bought the Marilyn Monroe painting for $195 million a few hours ago. Ooh, I'm not sure. That would be interesting to see. Charlie Richardson is here. Welcome, Charlie. Bagels and Walks says, love the building lights at night. Good to see you. Judy D and Emilio J, welcome. All right, so everybody, we'll continue our walk. Just let me put my computer away. But check out that article. So if you type !SPAC, S-P-A-C, it'll sort of outline a lot of the reasons why Goldman Sachs are exiting the SPAC market. And I think over the next couple weeks and months here, you are going to see, in short order, investment bank after investment bank after investment bank exit this market because they do not want any liability in terms of having investors sue them. And this reminds me, I believe the movie was Margin Call with Kevin Spacey. I'm not a big movie guy, so correct me in the chat if I'm wrong. But there was a very iconic scene out of the movie Margin Call, at least that's what I think it is, when Kevin Spacey was essentially talking with his managing director about selling all of this garbage to investors. And he's like, we can't sell this to these people because it's garbage, it's unethical. And the managing director turns to Kevin Spacey and says, we're not selling garbage, we are selling products to willing buyers or willing paying customers. And I think the same thing, like exactly, is going on right now in the special purpose acquisition market. And it's so strange how we've predicted this on the streams for over the past 6 months. So I'm just going to read a little bit of an excerpt out of the article, and then we will get started. It says, we are reducing our involvement in the SPAC business in response to the changed regulatory environment, says a Goldman Sachs spokesperson. Bloomberg News first reported on Goldman's move earlier on Monday, which is today. The outlet reported the firm is terminating its involvement with some sponsors while pausing all new issuances of SPACs, citing people familiar with the measure. The Securities and Exchange Commission in March introduced a host of new rules for SPACs that would mark one of the broadest attempts to date at a crackdown on blank check companies. The proposed rules would amend safe harbor rules and leave SPACs open to investors investor lawsuits for excessively rosy business forecasts. So essentially, what the SEC is trying to make legal, but it's not yet in practice, is the SEC essentially wants to say, okay, if a SPAC was selling investors falsified financial projections, which pretty much all of them are, because we've been covering it on the stream forever, investors have the right to sue. Right now, Goldman Sachs and a lot of these investment banks have zero liability. So essentially, they'll sell these products. They will make tons of fees and underwriting fees on underwriting a lot of these deals for these special purpose acquisition companies, but then they get to skate free should these things blow up. And they are blowing up in short order. So I think it's important for you guys to know. Otto is here, says, hey Tom, good to see you. Otto, welcome. Vinny Castellano is here, welcome, says happy birthday Judy. Happy birthday to you, good to see you. On this very, very windy night in New York City, but very happy birthday to you, and hopefully your Monday and your week is off to a great start. The Ralph says, you would think investors would be wise to these banks by now. Yeah, so I think, in every single market cycle, there's always some sort of frothy trigger, right? And it never ends. It's the same thing. But I mean, I'm not sure if you guys remember, but it was almost like relentless during 2020 and 2021. Every single morning you would turn on CNBC and you would want to, just know about the regular general market, but it was some other bank sense. And it's so strange to finally started to see everything unwinding right now. But it's sad because I think a lot of people are going to lose a lot of money, especially retail. It always happens like that. Just to give you guys an idea of how windy it is, check this out. It's probably like 50 mile an hour winds. Because essentially, all of the founders of these SPACs and all the insiders, they dump all their shares once these things finally go public. And then they'll just say, oh, we're just managing liquidity. That's why we're dumping all of it. Because essentially, the biggest issue that I have with a lot of these special purpose acquisition companies is, in my view, right, and this is my opinion, the reason why a lot of these companies don't go public via traditional IPO is because they don't have the stability of the earnings of a company that would take the traditional IPO route. So what they do is they create a shell company it's sort of like a reverse IPO. You raise the money first, you create a shell company, you make that shell company go public on an exchange, and then you look for an acquisition target later. And there's a lot less regulatory scrutiny with this, and what I believe is that a lot of these companies were giving falsified financial projections, or let's just say a little bit too rosy financial projections. And we've been covering this a lot because there's, I scan Twitter all the time, I scan Reddit, and it was so, maybe it's not their fault, but there was a lot of people on Reddit, a lot of people on Twitter pumping this stuff. And I think it's just because they're new to finance, they're new to the market, and they really just don't understand how a lot of this stuff works. But it always happens like this in every single market cycle. And what happens is once the SEC starts to step in, that's when everybody's like, yep, party's over. The investment banks that do a lot of the underwriting on these deals, they get to walk away with billions. They made billions off of this, and the public is left with losses. And then we just have a whole bunch more regulatory stuff we got to deal with. But right now we are on East 57th Street and 5th Avenue. It's not too bad out tonight. The only thing is just very windy. It's probably like 57, almost 60 mile an hour winds. Insane. Dan Zhang is here. Hey, welcome Dan. Says, when did the SPAC become a thing? I only learned about it after Bill Ackman. Yeah, so SPACs were always around, but they became exceptionally popular in 2000 and 2020. Sorry, I'm just adjusting my camera there. They became very popular in 2020 and 2021. It seemed like there was a new SPAC hitting the exchange every single week, it almost seemed like. Lady O is here. Welcome, Lady O. I hope you're well. James is here, says reverse takeovers have been around forever. SPACs are just new lipstick on the pig. That is probably the best way to put it there, James. And look, I'm not saying all SPACs are bad. That's not what I'm saying. But it did just get a little bit almost insulting about the amount of pumping of the SPAC market, because a lot of these companies have no earnings and no sales. There's that one SPAC in particular that was brought about by Chamath Palihapitiya. I don't even know how to pronounce his last name. His company, Social Capital, and Richard Branson's company, the space company, that was a big SPAC failure. But a lot of the retail investors bought that stuff. And, that's why we always try to say, if you buy things without any earnings or without any sales, when the market turns, you're really going to get hurt pretty badly. And I'm not sure if it's just the naivete of new retail investors, or I think a little bit of it was probably malicious intent of falsified forecasting of financial earnings or revenue forecasts. So they were probably selling investors a false dream, perhaps. James is here. Hey, James says, I remember having a conversation about this method of going public in 2000. Yeah, it's... And look, I don't think it's bad, but it's just they get around a lot of the necessary disclosures. Hey, Joseph is here. Says, Tom, have you been to K? Minamoto? No, I have not. It's an amazing Japanese bakery on 53rd and Madison. Wow, I have not been. Maybe we'll walk past it tonight then. 53rd and Madison, let's head there right now, because this is 56th and 5th. So we might as well walk past it today. Life, Liberty, and Guns says, Fox Business News thinks that the bottom will not occur until people have sold off enough to cover their margin calls. What do you think? Well, I think we're seeing a lot of forced liquidations here. I think we're seeing a lot of forced liquidations and liquidity issues, because essentially when everything is good and rosy, a lot of investors lever up, so they trade with a lot of leverage. So when the market goes down, they get margin calls and things like that. So I think there's a little bit more pain ahead, but as the market washes out a lot of this speculative activity, new bull cycles will come about. It happens every time. So I'm not going to say I'm glad that all this SPAC stuff is blowing up, because I never want to see people lose money, but I think it's going to eliminate a lot of the speculative craziness out of the market and a lot of the leverage. Shannon says, Tom, what is your opinion about all this money the president is printing to send off to Ukraine? Who is going to pay for that in the long run? I don't really want to get too political tonight, but we've been printing money to fund wars forever in the United States. Carson is here, says, I think it's a good thing for the market. Lots of junk exiting. Yeah, I think it's going to be, a lot of the people who have used the stock market as like a gambling mechanism are probably going to get washed out, or at least pretty banged up or damaged. But there's an old saying, markets tend to surprise to the upside and to the downside. So even if the S&P starts to trade at fair value or at a normalized forward PE, you may see further downside just because the market is irrational like that. But I mean, when I saw that, my friend actually sent me that article. They're like, yeah, Goldman's exiting all the SPACs. And the main reason why, well, I can't say the main reason why they're doing it, because I don't know, but I think it's pretty obvious, is because they don't want any of the liability where investors could turn around and sue Goldman Sachs. Oh, look at these dogs. Nice. Obviously Goldman Sachs doesn't want the liability, right? So Goldman Sachs has no problem making billions of dollars underwriting all this stuff and selling it to their clients. But the moment they have any sort of responsibility, they're out. They pull the ripcord. So that's all alleged. That's my view. But we'll see. Hey, Ruby Falcone is here. Welcome, Ruby. Welcome to our very late night stream here in Manhattan. Good to see you. Yeah, fantastic. Frankie says it looked like Pokemons. I know. Sunshine After Rain is here. Good to see you. Ralph says all that printed money is going to the military industrial complex. Yeah, they're probably going to buy, and I think that's why we're seeing stocks like Raytheon. What's another one? Grumman, Northrop Grumman. Vinny Castellano's here. Welcome. Frankie says your gimbal seems slightly tilted to the left. It probably is. I wasn't going to stream today, so I sort of threw this together really fast. But you're probably right. It probably is tilted slightly. Wendy England is here. Welcome. Good to see you. The Ralph is here. Vinny Castellano. Good to see you. Adams is on Facebook. I've been seeing a lot of fire sales for cars and luxury goods. That means margin calls are in. Oh my God. That's actually a pretty good indicator. It's a pretty good indicator. One indicator I always sort of use or look for when trying to identify potential market bottoms, it's kind of a funny one. But all of my friends that I very rarely talk to, like acquaintances, they start to text me, hey, what's going on with the market? Should I sell my stuff? Always around the same time. And what I've found is when I get those texts, it's usually the low is probably in within a month. But again, totally anecdotal data, but I just thought that was funny. The same thing happened in 2018. I'm not sure if anybody remembered the 2018 stock market sell-off into Christmas Eve, as well as 2020 COVID crash. But everybody, this is St. Thomas Church here on 5th Avenue, one of my favorite buildings in the entire city. The architecture here is absolutely beautiful. I see Diego's here. Welcome, Diego. Emilio J says all of the military contractor stocks increased when the war started. I'm also on board with the military industrial complex thesis. They probably planned this years ago. Good to see you, Emilio. The Ralph says, Tom, it seems like New York is pretty quiet. It is pretty quiet tonight. Well, I think we started streaming really late. I think it's almost 10:30 at night. and it's quite windy, so probably not a lot of people are here. Hey, Quants is here. Good to see you, Quants. I see Kat. Ryan Royal says, beautiful St. Thomas Church. Michelle K, welcome. Tin Man is here. Good to see you, Tin Man. Diego Quants says, aren't you glad you bought your house before all of this? Yeah, I mean, the numbers worked for me. The property cash flows really well. What I hope is that, you know what I was, so to piggyback on what Quant's comment, you know, think about where the 10-year U.S. Treasury yield is now. I think we're a little bit under 3%. Could you imagine if we go to 4, 5, 6% on the 10-year? I mean, where do you think prices are going to be then? So I don't know. I mean, I'm looking at a lot of things. One of the things that's very interesting to me right now, if you look at crude oil, ticker symbol CL, I mean, I'm pretty convinced that we've probably topped the night we did the stream where crude oil hit 130, because crude is having a very, very hard time holding above its 50-day moving average. So that in and of itself could be an indicator that we're going to see a lot of these energy stocks start to roll over here, as they've sort of tend to trade at premium valuations. And that's what I think we're seeing now. You know, the next new thing on the block, if you turn on CNBC or anything, is, oh, everybody crowd into these energy names. But I mean, if you look at historical valuation trends, these things are borderline pretty frothy right now. And they're cyclicals. So then again, I'm not saying it's a top in energy, but all I'm saying is take a look at crude oil right now. We're struggling to hold $100. So I think it's very possible we could have peaked in crude. But I would actually like to see the prices of homes and apartments come down, because I would actually like to pick up another unit here. And I think it'll also allow a lot of first-time buyers entry into the market as well. Carson, that's a very good point. So Carson says, I think the China lockdowns are also helping oil prices come down a little bit. That's actually a really good point. That's a really good point. What's going on over there is just, I mean, it's insanity. Insanity. Shannon, welcome. Western Mass Dave is here. Good to see you, Western Mass Dave. Thank you for joining the very late night stream. I apologize for streaming so late, everybody, but I was pretty crushed with work. NMB 045 says, I wonder what other speculative instrument the SEC will crack down on next. Yeah, so for anybody who's just joining, if you type SPAC, S-P-A-C in the chat, it's going to drop a link to an article that came out today in CNBC, but you know, you guys should also do a little bit more digging. There was a really good article out of Bloomberg, a really good article in the Financial Times that was covering the big news story of the day about how Goldman Sachs is pulling out of the SPAC market, or the special purpose acquisition company market, due to the potential for increased regulatory scrutiny from the SEC. So this is all alleged, but here's my thought process, and you guys could let me know your thoughts. Right now, Goldman Sachs has zero liability should they underwrite or sell these SPACs to investors, and investors lose money because of falsified financial documents and things like that. So Goldman Sachs, as of right now, and again, allegedly I'm saying this, I don't want any problems with Goldman Sachs. In my view, Goldman Sachs has no problem selling you the dog, you know what, expletive. But the moment that the SEC says, okay, if you want to play this game with all of these frothy SPACs, and if you are putting out a prospectus to investors and saying, hey, we expect this company to have X amount of revenue within the next 5 years, and it turns out those revenue estimates were falsified or fraudulent, blatantly, investors reserve the right to sue you for lying to them and deceiving them about the investment. Goldman Sachs doesn't like that. Goldman Sachs is all about making the billions without any liability, while retail investors hold the bag. So my thesis is they're getting out of the game while they have no liability. And if the SEC pushes this through where they says, look, you could sue should these documents and financial documents be falsified about revenue projections and potential earnings projections, you will not see any major investment bank participate in the SPAC market, I can guarantee you. And I think that's why they're pulling out now. I can't say that conclusively, that is just my opinion, but I mean, it's kind of obvious. But anyway, we've been covering that on the stream for I don't know how long. And if you guys are reading the Behind the Street newsletter, if you type !news, NEWS in the chat, you could stay up to date with all of our financial newsletters, which we write every single Tuesday after the market closes, which we've been talking about and warning about a lot of these SPACs for quite some time. And again, let me clarify, I'm not saying all SPACs are bad. It's not what I'm saying. I'm saying the vast majority of them were. And I think that there's a very, very big possibility here that a lot of these financial projections were potentially fraudulent. Potentially. Allegedly, I'm not saying they were, but I mean, I think we could put two and two together. I mean, all of these SPACs are probably going to go to zero. Hey, Marty Lewis is here. What's up? Marty, thank you for joining our late night stream. We're walking outside St. Patrick's Cathedral. Beautiful church. Hey, Roy S. is here. Says, hey, Tom, it's already Tuesday on my side of the world. Very nice. Good to see you, Roy. Dr. Longus is here. Welcome. So if you look straight ahead, this is actually the Empire State Building all lit up in green. Looks beautiful tonight. Hey, Prince Ice is here. Says, are you having a great night, Tom? I'm having a really good night. It's a little bit windy in New York, but it's a beautiful night nonetheless. John L. is here. Says, good evening. CPI number Wednesday may get a rally on a surprise lower than expected. John, I think you may be right. So that CPI number, very important. The Consumer Price Index will come out on Wednesday, and that could potentially signal to investors on the street that we've potentially hit a peak in inflation. So please watch out for that. Roberto Castro is here. Welcome. Hey, Photos from Around New York is here as well. Samantha R. is here. Good to see you. John Cardy is here. Hope you're doing fantastic. British Gray is here from Tampa, Florida. Welcome. Carson says, Tom, what do you think about banks in general right now? They do well in higher interest rate environments, but investors may be scared about a recession. Yeah, so banks tend to do better, obviously, when interest rates are higher. But I think, there's the old saying that 7 out of 10 stocks tend to follow the general market or the trend of the general market. So if the overall market's getting crushed like it is, probably everything is going to get crushed. The only things that are actually holding up quite well, and we've been talking about this on a couple streams, are essentially the recession-proof companies. And I want to use that term lightly, recession-proof companies, but if you talk about like a Church & Dwight or something like that makes toothpaste, ticker symbol CHD, Walmart was up today, Target. It was very, very interesting about, if we looked at the overall broad breadth of the market, almost every single stock was down on the market, except Church & Dwight, Walmart, and I think Target. And we've been talking about this, and I think that means investors are positioning themselves for a possible recession, because if we do fall into recession, I think the bet is, look, even though we have a downturn in the economy, people still need to brush their teeth, people still need to buy toilet paper, and people still need to go to Walmart to buy affordable food at affordable prices. But right now we are looking at 30 Rock. So I just thought it was quite interesting about how Church & Dwight actually caught a pretty nice bid today, as we were looking at 30 Rock. Eyeglass Lady says, who are recession-proof companies? Those that produce necessary items. Yeah, so usually, companies that sell necessary things, right? So I guess the thought process there is, if we fall into recession and people unfortunately start to lose their jobs, like let's say, for example, I lose my job and I have no income, I'm probably not going to be buying airline tickets to go on a vacation. I'm probably not going to be staying in fancy hotels. And this is just an example, but I still need to brush my teeth, right? So I'm probably still going to buy, baking soda products. I'm still going to buy toothpaste and toilet paper and things like that. And so those companies who sell those particular products, I think the biggest one that everybody knows is like a Church & Dwight. So it's just interesting about how those are the stocks that are really rocking and trading, near all-time highs, are those particular companies. And I think that's very telling about investor sentiment in the market. Hey, Arum Z is here. Welcome. Says, hey, Tom, how's it going? It's going good. Today was a busy day, though, man. Crazy busy. Triple G is here. Good to see you. Tom AK, good to see you, man. Photos from around New York, says Tom. The Empire State Building is green in honor of Robin Hood's annual benefit. Very cool. MJ is here. Good to see you, MJ. Welcome. Unlimited stimulus, as Bitcoin cracked below 30K briefly. Not inflation proof. Yeah, so we still have a very, very strong correlation between Bitcoin and the NASDAQ. So it sort of trades like the NASDAQ and a NASDAQ stock. But I think that Bitcoin will probably make its way towards its 200-week moving average, which would be, I think, right around 21,000, I think. If you look at my Twitter, I posted the chart. I pinned it to my Twitter feed. So if you follow Walks Wall Street on Twitter, that's where I think it's probably going to go. I think Bitcoin still has a lot lower to go. Because one of the things about Bitcoin is a lot of Bitcoin and cryptocurrency traders tend to deploy a lot of leverage. And the market really needs to wash out a lot of that leverage. So what happens is when traders trade with a lot of leverage and they start to get margin called, it's forced selling upon forced selling upon forced selling, which causes mass liquidation. So that can drive prices like you haven't even seen. But I think a good long-term buy, in my view, and this isn't advice, I'm just telling, I'd like to share what I do from time to time, is right around that 200-week moving average. I think is probably a pretty decent entry point. Hey, Sherry is here, says, hey, Tom, good to see you, Sherry, welcome. Comic Con Hunter is here, says, hi, Tom. James is here, says, Tom, Bitcoin is a risk-on asset, and right now things are risk-off. Agreed. James, I do think that over time we'll probably see a decoupling with that. I could be wrong, but that is still my view. But right now, as to your point, there's a strong correlation between Bitcoin and the NASDAQ. Triple G says, Tom, fear is a greater emotion than greed. We're going to see a lot of selling off. People are not staying long in their investments. This is Triple G. I think that's a pretty good thesis there. And I think I said it at the beginning of the stream. Oh, a lot of glass is broken here. I think I said it at the beginning of the stream, but a funny kind of indicator that is always a little bit telling when we're either at tops or bottoms in the market is I always tend to get either text messages or calls from old friends that I really very seldom talk to, asking me about the market and the market conditions, and sometimes family members as well. That's a big tell. Every time we experience big volatility in the market, I always tend to seem to get more texts about the market. So sometimes I try to use that as a contrarian indicator, just obviously totally anecdotal, but I just thought that was funny. Arumzi says, Tom, can you please tell us what neighborhood we are in? Yes. So this is Rockefeller Center. We are right here at 30 Rock. Unfortunately, it is closed though, so we can't go inside. But right here is where the ice skating rink used to be, and now it is a roller rink. Strider 1239. Same thing goes for crypto. Good to see you, Strider. British Gray is here. Welcome. Arnold says the fear and greed does depend on market sentiment, says Arnold. Yeah, so I think that is another good indicator, the CNN fear greed indicator. But I think the number one thing that I want to see for this market to potentially find a major bottom is the VIX really needs to go off on a tear. I mean, right now I think the VIX is right around 33, I think. Even though historically speaking, that's quite elevated, but in order for a huge flush out, you need to see the VIX absolutely explode. And we haven't seen that yet. Also, I like to look at the put to call ratio, and usually at market bottoms, the put to call ratio really goes off on one, and we still haven't seen that yet. So I think there is still some investor complacency here. Another piece of interesting data that I was looking at, actually one of my good buddies sent it to me over the weekend, is the net fund flows into some of the ARK innovation ETFs. So a lot of those Cathie Wood, very speculative. A lot of the companies within those exchange traded funds have very little earnings, if any. They are actually experiencing positive fund flows, which means investors are buying the dip on a lot of these ARK innovation ETFs. So to me, that tells me that right now there's not a lot of fear as people would make it out to seem. I think still people could potentially be a little bit complacent, because during market bottoms, I mean, you don't see, people buying that hard, especially an ETF that's down like 70%. But then again, Cathie Wood has done a good job of building like a really cult following. And I'm not trying to knock Cathie Wood at all. I'm actually a huge fan of her and her research. I think she employs probably some of the smartest analysts on Wall Street, in my opinion. But there's a difference between being right and being right at the wrong time. And I think, unfortunately, Cathie Wood is going to be right, but just not now. It's probably her thesis is probably about 5 to 10 years off. But again, that's just my view. NMB045 says, Tom, are you worried that crypto naysayers will see Bitcoin's tumble as vindication? Well, yeah, I've been through almost every single Bitcoin cycle. I've seen the same thing with the huge Mt. Gox crash. I'm not sure if anybody was involved in Bitcoin then. I've seen it during the COVID crash when we crashed all the way to, I think, almost 2,900, 3,200. But yeah, to your point, I think the vast majority of cryptocurrencies are probably fraudulent, especially a lot of the altcoins, but the only two that I have exposure to are Bitcoin and Ethereum, but my highest conviction trade is Bitcoin. I don't get involved in any of the other alternative coins because, and the real reason for that, everybody, the real reason for that is because as I look into the very murky waters of the SEC, right now, even though the SEC has not gave a final verdict on it, judging based upon the very obscure clarity we have, all of those alternative coins are securities, in my view. Again, I'm not saying I'm right, but a lot of the altcoins are securities, and if that's the case, a lot of the founders of those alternative coins essentially are soliciting unlicensed securities, which means big jail time. So I don't want to be involved in any of that, so I stay away. Hey, Dante Rose is here. It says, hey Tom, stay safe. Thank you so much. Good to see you, Dante Rose. Hey, for the love of God, says hello Tom. Miami skateboard coming back soon. Yes, coming back very soon. James says, Tom, remember when AMC was the big thing? Seems like so long ago. Yeah, I mean, a lot of that speculative activity was going on. Anthony says, big disagree. Yeah, and I mean, I could be wrong. I totally admit I could be wrong. But just about the, with the knowledge that I have and what the SEC has sort of said, a lot of those altcoins are potential securities. So, Sunshine, New York City. Good to see you. Anthony, but yeah, Anthony, you could be right. I mean, maybe a lot of these aren't, and then that means I'll miss out on a lot of the gains from investing in those altcoins. But that's sort of like the risk assessment I've taken, and I think I'm okay with that. But it's just I just never want to get wrapped up in the SEC, because the SEC could take a lot of this stuff to zero overnight. All they have to do is say, yeah, all of these altcoins are unlicensed securities, unregistered securities, and then they halt trading on them, and it's a big issue. Hey, M. Size says the famous quote, buy when everyone is in fear and sell when everybody is in greed. Yeah, that is a great quote. That's a really good quote. British Gray says, don't leave out AMC. Yeah, all of that sort of speculative nonsense, right? And I remember when all this was going on, we would always get hammered. Don't you guys remember on the streams we would get so many questions about should we buy GameStop and AMC? And I mean, a lot of it's all nonsense. So I would stay away from all that stuff. Triple G says, Musk reassured Cathie Wood that Tesla will accept Bitcoin again, but didn't comment how soon. Very interesting. Jerry says, I bought $20 of Bitcoin in 2017. Very nice. Let's see who we have here. I think my chat is going a little weird. I can only see like half the people. Alton is here. Welcome, Alton. Good to see you. Oh yes, happy Mother's Day, everybody, by the way. Hope you had a good Mother's Day weekend. Adam says, what do you think the crossover is for crypto and traditional traders? Could the crypto sell-off be a way to cover margins in traditional stocks? Well, if I was facing a margin call, I mean, the first probably assets that I would sell are, I mean, if I owned any, would be like the speculative cryptocurrencies to raise cash and then pay off a margin call maybe. But I don't really think that affects it as much as people think. Future Endeavor says, what's your take on pork belly futures? Do you think they'll make a comeback? You know, I was watching a very interesting interview with Ray Dalio, and I think Ray Dalio, one of his first jobs was trading futures for McDonald's. Did anybody know that? The Charlie Roll says, hello Tom, it's always a pleasure to hear your voice and watch your videos. Thank you, Charlie. Much appreciated. But to touch on the cryptocurrency environment for a minute, and this is speaking from experience. So I was at the 2022 Bitcoin conference, and I had a press pass to the event. So I actually got to talk to a lot of founders of a lot of these projects. And I went to a lot of the after parties and networked with a lot of people. And I could tell you conclusively that there is a ton of talent being sucked away from traditional finance, from traditional tech, from the big FANG names, and going into the blockchain and cryptocurrency space. That's just the truth. I mean, extremely, extremely brilliant and talented software engineers, are starting to work in the blockchain and cryptocurrency space. So that's undeniable. And one of the things that Paul Tudor Jones always says is you always follow where the talent is going. And, I think if you sort of lived by that mantra, think about all the talented software engineers at a company like Microsoft, Apple, Google, Alphabet, right? All of these massive FANG type companies, they employ the best and the brightest minds from all over the world. And I think we're just starting to see that top talent get sucked away from Wall Street, from traditional investment banking, get sucked away from traditional big enterprise software companies into the cryptocurrency space. So I think it's going to take a little bit of time for the build out to occur. There's probably going to be multiple boom and bust cycles. But from networking at that event and just knowing people that have, at one time worked on Wall Street in big enterprise tech M&A, that have now gone on to work for cryptocurrency broker dealers and other different companies, there is a ton of smart people that have been educated at the top Ivy League institutions in the United States that are now starting to take their talents that way. So that is the one, the major positive I'll say about that. Hey, Arum Z is here. So this is someone that works in ML. I can strongly attest that a lot of software engineers are leaving TradeFi and leaving for Web3 and crypto. Yeah, it was a lot of people there. A lot of very smart people. Extremely talented people. Indie Guy is here. Says, hey Tom, always enjoy your newsletter. Sell in May and go away. Hey, thank you so much, Indie Guy. Very much appreciate that. Hope you are well. So if you guys want to read the newsletter, I write a free financial newsletter for everybody in the group. So if you type !news, NEWS in the chat, the Nightbot will drop the link to the Behind the Street newsletter where you could stay up to date on all of my thoughts on the market. But the topic for tonight, we were talking about special purpose acquisition companies. And the big news on Wall Street is that Goldman Sachs is now pulling out of the speculative SPAC business. And if you guys have been reading the newsletter, we've been talking about how all of this is going to come to a head sooner than later. And it seems like today is that day. So a lot of the speculative activity within the special purpose acquisition market is coming to an end. The SEC is putting out potential new rules and regulations in regard to having these big investment banks take on liability or potentially opening them up to liability to being sued from investors should those financial documents actually turn out to be falsified or those financial projections. So Goldman Sachs is, I think, trying to front run the SEC and get out before they force or they face any sort of responsibility or liability. Same thing that happened in 2008. So if you want to read more about that and stay up to date, click the link that the Nightbot dropped and you could sign up for the newsletter for free. WW says, Tom, I bought Virgin Galactic SPAC way back. Then I sold, thank God. Yeah, that's probably... That was the biggest SPAC that was being pumped by Chamath and Richard Branson. The company has no earnings, no sales, and I think there could be some litigation stuff going on, but we'll say allegedly for now. We don't want to get in trouble. So this is the News Corporation building right here, and News Corp actually just acquired Investors Business Daily, William J. O'Neill Company. But in times like these, everybody, when the markets are under pressure, when everybody's freaking out, this is the best time to double down on building fundamental skills. Whether if you work in tech or if you're a software engineer, focus on becoming the best software engineer you could be. If you're an investment banker, focus on becoming the best investment banker you can be. If you are in enterprise tech sales, focus on becoming the best salesperson you can be and doubling down on your skills, because there will be new bull markets. So on my Twitter, I actually dropped 3 of my favorite investing books. So if you follow @WalksWallStreet, this is the time where you should be focusing on building skills. So reading the best investment books out there, such as Margin of Safety by Seth Klarman, one of the best books ever written. Reading How to Make Money in Stocks by William J. O'Neill, the founder of Investors Business Daily. Reading Common Stocks and Uncommon Profits by Phil Fisher, one of the greatest investment books of all time, and doubling down on understanding how to evaluate companies, because once the new bull market turns up, we will be ready to capitalize. Hey, Marcelo is here, says, wow, UBS area, my favorite place in New York City. Good to see you, Marcelo. Good to see you. Ed T says, hi, Tom. What do you think about SPAC stocks like Palantir and SoFi? Well, Palantir posted earnings today. They got killed, down another 20%, but I do not like SPACs at all. That's what the stream is about. Stay away from the SPACs. Let's see. Somebody's like, Tom, will you be writing for Investors Business Daily? Yes, but on a contractual basis. So what I'll be doing is submitting articles to IBD, and should they make the paper, they will publish them. Essentially, I was going to, I applied to a markets writer position at IBD. I had some interviews with them. They were great people. But we decided that it's probably not a good idea for me to become an actual employee of Investors Business Daily for a markets writer position, because, I mean, just to be realistic, the pay is like pennies in comparison to what I'm making in enterprise tech sales. So they're like, we love your newsletter, we love the content you make. So if you ever want to write an article, submit it to us. Maybe we could sign you up as a contractor and publish it in the paper if we like it on a contractual basis. So that is what we will be doing. But I've been so focused on writing my own newsletter, I haven't had time to write anything for them. Robinson says, I'm a libertarian and I'm starting to study data science. Oh, a librarian. I thought you said libertarian. That's my dyslexia kicking in. I'm a librarian starting to study data science to improve my skills, and I live in Brazil. Let's see how it goes. I think, data science, you'll always have a job. You will always be in demand. You will always have a job. So I think that's fantastic. Love that. And good luck in anything you do, my friend. Data science is a great career, and who knows, maybe you'll get a job in New York City. It looks like something's going on over here. Let's see. Hey, Michelle McGraw is here. Welcome, Michelle. Wow, check out the top of the Empire State Building tonight. It looks fantastic. It's all green, I guess, for Robin Hood, is what Photos from Around New York said. Arnold says, Tom, I was studying data science, but I just dropped out. Well, good luck to whatever you're doing next. Marcus here, welcome. Sparks Carnival says, Tom, I do data visualization. Very nice, very cool. Love that. I hope nobody got hurt. Let's see this scooter. You know, a lot of people have been getting hurt by these, the electric scooters as of late. And I actually think, did anybody remember that story? I think there was an electric scooter on the Upper West Side of Manhattan that hit a very, very famous actress, I believe. And I think she died, unfortunately. Can anybody fact check me on that? I don't want to be putting that out there to the world, but a lot of those electric scooters have been involved in a lot of accidents. So if you guys are cruising around on those, please be safe. Yeah, Carson says those scooters are everywhere I am. You know, I think there's a couple companies that do like the Uber for the electric scooters. Hey, Chaudry is here, says, how are you? I'm doing really good. I hope you're well. Michelle McGraw, welcome. Yeah, Ruby, like, it's crazy. During the daytime, you'll see people going probably 20 miles an hour on those electric scooters. So Lisa Baines it was. Yeah, it's horrible. And I think that happened on the Upper West Side. So I guess allegedly, I don't know. But there was a electric scooter coming like 25 miles an hour down the street. And I guess she was trying to cross the street at the time. And they hit her. And I think the guy kept going. I'm not sure if they caught him or not. But, I mean, she died over it. Yeah, it looks like I think it was probably a scooter accident or something. Hope everybody's all right. Hey, Vertex Poly Fort is here. Welcome. This is afternoon. Oh yeah, those scooters should be limited to at least 10 miles per hour. E-bikes have a 20 mile an hour limit. Yeah, and I mean, if you're going 20 miles an hour on a scooter, I mean, if you see that in person, that's like a rocket. Because sometimes I clock myself on a skateboard going like 19, 20 miles an hour, and the board starts to shake. I mean, you're flying at 20 miles an hour. Hey, 48 is here, says, good evening, Tom. Hope you are very well. I am 48. Welcome. 48, if you're just joining, the topic for tonight is special purpose acquisition companies. So if you type SPAC, SPAC in the chat, the Nightbot will drop the article that we were talking about today, where Goldman Sachs is officially pulling out of all SPAC operations. Wow, but everybody check this out. The Empire looks fantastic tonight. If you guys like this view, give a thumbs up on the stream and feel free to subscribe if you are new. This is right outside of the Bank of America Tower. I'll try to show you guys the entire top. You know, it almost looks like St. Patrick's Day here. Vertex Poly Fort says, Tom, lovely night in New York City. Thank you. Mr. Ming is here. Vinny Castellano says, love it. Good to see you, Vinny. Wendy England says, views are always stunning. Thank you. Yeah, Fredix is like Wizard of Oz green. So essentially, everybody, because we do have a couple people joining, the SEC is potentially going to impose new, stricter rules and regulations on the SPAC market, which is the special purpose acquisition market. And one of the major, I guess, downsides of the SPACs is that allegedly there's been a lot of falsified financial projections of a lot of these SPAC companies. And we've been writing about this for probably the last 6 months on the Behind the Street newsletter, warning to stay away from all of these SPACs because a lot of the companies have no earnings and no revenue. So the SEC is going to, probably going to impose stricter regulations in relation to giving liability to the investment banks that are underwriting these deals. So for example, if some of these financial projections turn out to be not true and it's found to be in malicious intent, you know, Goldman Sachs could be held liable in which case investors could sue Goldman Sachs over the SPACs. So I think that since Goldman Sachs sort of sees the writing on the wall here and says, look, we just want to sell this stuff to investors to make money on it and underwrite these deals and rake in a ton of the fees, but we don't want to be held liable when this garbage hits the fan. So we're going to exit the market before we face any consequences. That's what I think is going on, but let me know what you guys think. Patricia Ivory is here, says I'm going to miss this beautiful views when you're back in Florida. Thank you, Patricia. Porge Smith says hi from White Horse, Canada. Very nice. Marcelo Gill says all the U.S. stock papers were closing negative today. Is that a result of U.S. inflation? Or you mean inflation? Well, we're getting the CPI numbers Wednesday. So when we're getting those CPI numbers. Quint FBL says DWAC, a SPAC. Yeah, that is another SPAC that is total junk. I believe that is the Donald Trump SPAC. Is that correct? I would stay away from that one too. Triple G says at this point class action lawsuits against SPACs seems inevitable. Well, you can't do that now because they can't be held liable for any of it. But essentially, so the reason why there's all of this kludginess, is that a word? Well, we're going to go with it anyway. So I think the reason why there's a lot of this kludginess around the financial reporting or the projections of these SPACs is because in the traditional IPO market, it tends to be, not all the time, but if we're talking in general here, it tends to be more mature companies with very stable revenues, and maybe companies that are just on the verge of profitability, but they tend to be larger companies that go public via IPO. SPACs tend to be less well-known companies or companies that are just starting up. So sometimes SPACs could have no revenue at all because essentially the shell company goes public, and then after the shell company is public, they look for an acquisition target. And if they can't find an acquisition target after a certain amount of time, the money is returned to investors. So it's sort of like the clock is ticking, the time is ticking for you to find an acquisition target. And oftentimes, when the markets are raging and everybody can have, a ton of access to capital, what they'll do is they'll just find any piece of garbage company and bring it public via SPAC and dress it up and tell investors how great it is. And what happens is a lot of the investment banks make a ton of money on the deal flow, in the equity underwriting fees and things like that. So I think that's why you could potentially see falsified, I'm using air quotes here, financial projections. But I think that'd be pretty hard to prove, but I think it's pretty obvious. Hey, Chris Beeman is here. What's up, Chris? So Chris is joining us from the one and only Arizona. Good to see you. So we're walking right outside of the Stephen Schwarzman building, the beautiful New York Public Library. But even better, if you look straight ahead, you could see the very, very top of the Chrysler building right here. And if you look up even more, you could see the brand new One Vanderbilt building right here. Fantastic. And I think it's so windy tonight because there's a warm front moving in. So I think all this week in New York is actually going to be pretty nice. Over Mother's Day weekend, the weather was kind of horrible. It was almost like it was winter, spring, summer, and fall in one weekend. You know, it was snowing relentlessly. It was, I mean, not snowing, excuse me. It was raining relentlessly, and it was really windy. It was kind of bizarre. Hey, Robinson Cruise is here. Says, Tom, this is a great place. Yeah, this is one of my favorite buildings here, the Steven Schwartzman building. And if you go inside and you actually make an appointment in the research library within the New York Public Library, you'll be able to you'll be able to read a lot of very classic investment books. One of which is one of my all-time favorites, which is called Margin of Safety by Seth Klarman. I think there was only 2,000 copies ever printed of Seth Klarman's Margin of Safety. And right here, if you actually make an appointment, you could sit in the research library and read an original copy of the book. And I've been dying to get my hands on an actual copy. Ooh, I think this guy's going to try to... No, he's stopping. But yeah, if you ever visit New York, I would do that. Spend an hour in the research library and you could read an original copy of Seth Klarman's Margin of Safety. You know, on my Twitter today, I posted a list of my favorite investing books of all time. So if you want to check that out, please check it out. I think they're very good resources. Yeah, somebody says, love the architecture. Beautiful architecture here. Yeah, Patricia Ivory's like, Tom, the weather was bipolar this weekend. Indeed it was. Western Mass Dave says, Tom, did you ever get those 2 books at the East Village bookstore? So I did. Finally, I did. You know, and one of the books was an original copy of the Japanese candlestick books. And it's a huge, huge book. It probably weighs like 10 pounds. But it's one of those books that you put on the coffee table. So I was able to pick that up for like $10. If you want to buy an original copy, it's probably going to cost you $100. But this is the front of the New York Public Library. James says, oh, I have the Japanese candlestick book. Yeah, so there's an original one at East Village Books. I bought it. They were selling it for $10, but yeah, I got it. That's a good one. Sometimes they have some good stuff there. And I think that, so the reason why they have a lot of good stuff is because there's a lot of estate sales here, especially on the Upper East Side of Manhattan. There tends to be a lot of wealthy, elderly people on the Upper East Side. So when they pass away, a lot of the times their kids or their grandkids or whatever will take their entire libraries, which are golden. I would never ever sell any of that. But they'll take them to bookstores around the city and sell them for pennies on the dollar, like for 50 cents a book, when these books are worth like $150. And they'll sell them to these booksellers, and then the booksellers will sell them for like $10, $15. So in New York City, you could find a lot of financial books that are extremely rare, obviously because New York City is the financial capital of the world. So anytime there's those big estate sales, probably is a good probability that there's going to be some good investing books there. But on West 40th Street and 5th, this is the brand new New York Public Library right here. And if you go to the 5th floor, you could actually use the Bloomberg terminals for free. So all you have to do is make an appointment, and you can use these 100% for free. Right here. But we're going to walk past the other side of Bryant Park. So right now we are looking at the Bank of America Tower and also Salesforce Tower. Yeah, so the Strand is another good bookstore, you're right. Ryan Royal says, Tom, what street is East Village Books on? I want to visit all those bookstores when I'm in New York City. So I think East Village Bookstore is right. So I'm horrible with the streets, but I think it's right at St. Mark's Place. So if you go to St. Mark's Place by the pizza shop and you keep walking over like 2 avenues, you'll hit right into it. But I believe, I don't know if it's East 8th Street. Yeah, no, I think Photos from Around New York. You're right. It is St. Mark's Place, East Village Books. I was right. Hey, Arnold, thank you so much for your super chat. Much appreciated. Thank you for the donation to the channel. You were very kind, and thank you for the donation. Cynthia Beals says St. Mark's near First Avenue. Yeah, you'll know when you're there, because you'll see, if you want to take the train, I would just get off at Astor Place. So you'll see the Starbucks there, St. John's University, the satellite campus is right there. And then you just go to St. Mark's Place. So when you smell all the marijuana, when you smell all the flowers around that area, you'll know you're in the right spot. Triple G says 99 St. Mark Street is East Village Books. Thank you for that. British Gray, good to see you. I'll give you guys another look at Bank of America Tower, one of my favorite towers in all the city. And Salesforce Tower, Mark Benioff. Ticker symbol CRM. Marcelo says, how is your battery power tonight? It's actually pretty good, because it's going to be a shorter stream than normal, because we started so late. We usually start at 8:30 Eastern Standard Time. We usually start our streams, but I did have a lot of work to do. So this WeWork, I actually work out of here sometimes. This is a beautiful WeWork. It has all the original architecture here. I think I probably posted some pictures of this WeWork before on various social media outlets, but this is a beautiful, beautiful office. At 54 West 40th Street. I always love when they put the American flags up like this. James says, walk up to 16th Street for all the Indian restaurants. Yeah, there's a lot of good spots there, for sure. For sure. But now that I think the NASDAQ is off about 25% from all-time high, the S&P is almost there. I think about 16%. And I think if you're definitely if you're under the age of 35, I think this is going to be one of those generational opportunities for you to level up your life, really, really change your life here. Because there will be new bull markets, and it's going to create exceptional opportunities for us to buy a lot of these fantastic companies that are generating a lot of free cash at more reasonable valuations. I think if the S&P can make its way down to, let's say, 15 times projected forward earnings, maybe the NASDAQ the same amount, maybe a little bit higher than that, maybe 19. I think that over the long term, that's a big generational buying opportunity there. James says now is definitely the time to buy as long as you hold until things turn around. Yeah, I disagree with that a little teeny bit because, a lot of people will be, look at what happened in 2000, like with Sun Microsystems and Cisco. People said, oh, Cisco can never go down 90%. It's Cisco. No way. Things can go a lot lower than you think. So I think if you're going to buy something for the long term, if you're holding like 20 years, I would probably just buy the broader index. I would not try to bet on individual stocks. You never want to buy stocks when they're in a downtrend, contrary to what everybody says. You never want to buy stocks when they're going lower because they can go a lot lower. I would wait for a follow-through day or something. But if you have cash to put to work and you're in your early 30s, late 30s, and you want to dollar cost average into the broader index, I think, as we get down to, 15 to 20 times forward earnings on the S&P and the NASDAQ, I think you'd be fine over that time, 100%. I think you're right. Hey, Micers here says it's Tesla. It's Tesla to go around 500. Elon Musk gets margin called for the loan he took on Twitter. Well, I think with that, so you're right, he does have a lot of Twitter shares as collateral, but I think if you look at, I think he has Larry Ellison committing about over $1 billion to the deal. I gotta look at it again, but I'm not so sure that's true. Could you, let me see, Micah says it's 50. I'm intrigued now. Micah, you have me intrigued. Could you post a link to that? Because I definitely want to read more about that. But I think Larry Ellison is giving him money to put up for Twitter, isn't he? Uh, 8904 says 41st Street, please. So I think we just walked past 41st Street, but we're going to have to head uptown anyway as we end the stream. So we'll probably head back up there. But check this out. This is a great view of the Empire. Hey, Shot by Scott. What is up, man? Good to see you. I'll be back down in Miami pretty soon. Arnold says, you joined Jiu-Jitsu yet? Not yet. Not yet. I still got to figure some stuff out, but I'm definitely intrigued on it. To Greatest says, Elon is not going to lose everything for Twitter. You'd have to be a moron to think that. Yeah, I think you're probably right about that. I'm not so sure about that margin call situation. I'm not even sure if that makes... I didn't hear about that. What I heard is that I know he's using some of his Tesla shares as collateral for these loans. But I also think he has a ton of outside capital from other people too. So I'm not so sure about that. Unlimited Stimulus is if Tesla's price falls 40%, Musk will get margin called. Warwalker says, Tomcat, are you staying in the city tonight? Yes. So I will be staying in the city tonight. We started the stream later than normal. I've just been getting crushed at work today. And I have to be up extremely early tomorrow as well. John says, nice color green. Supposedly it's for Robinhood, the foundation. And it's funny as we talk about a lot of these speculative sort of junk stocks on the street. I think Robinhood is definitely one of them. I think just Robinhood in general is just a horrible, horrible company. But that is just my personal opinion. I think that they, as a company, purposely project and encourage poor investing behaviors, like gambling behavior with the confetti blowing in your face and all that. But yeah, the news of the night is Goldman Sachs is exiting all of their SPAC activity. So if you type !SPAC in the chat, it'll drop the link to the article. But we've been talking about this for a while. You know, a lot of the SPAC froth is exiting the market. And a lot of these SPACs have just been a huge money grab for founders, investment banks, for the underwriting fees. And it is the retail guy that gets left holding the bag on these unprofitable SPACs. But I think the biggest highlight of the night is probably this view of the Empire State Building. Am I right? I think so. Beautiful view here, right on 35th Street and Broadway. (35th Street, Broadway, right here. Now we are at the very famous Macy's. So Macy's is in a little bit of litigation, I think, with Amazon now over this sign. I'll show you guys. So supposedly, Macy's does not own this sign here, and Amazon wants to use the sign for their advertising. It's kind of strange how they don't own it, but I believe it's this one. So I don't think Macy's owns this. So I think Amazon wanted to come in here and put like an Amazon advertisement here, which would be very off-putting, but supposedly they don't own it. Hey, Mohammed is joining us. Welcome, Mohammed. Good to see you, my friend. FredX is Tom. Are there any residences in the Empire State Building? There's not. So it's all office buildings and I believe LinkedIn. So LinkedIn is a company that Microsoft owns. And Microsoft has one of their main offices right here. Hey, Carol H is just joining us. Says, hey, Tom, how are you? Good to see you, Carol. Hope you're well. So speaking of Carol H, I actually think she used to have an apartment right in this building here. But Carol, we were just talking about the news that Goldman Sachs is exiting the SPAC market. So we were talking about some of the new potential regulations that will be coming about by the SEC to give liability to a lot of these investment banks that are underwriting these SPAC deals. So should there potentially be any falsified financial projections of these frothy, speculative SPAC companies, investors could potentially sue the banks that are underwriting these deals and so hold liability. So I think that's why Goldman Sachs is exiting the SPAC market. But look, we've been writing about this in the Behind the Street newsletter for a long time, warning about the SPAC frothiness. So if you guys want to receive that Behind the Street newsletter, if you do scan the QR code on your screen, you will be able to stay up to date on our weekly newsletter. So every Tuesday after the market closes, I send out a free financial newsletter covering not only the US equities markets, but emerging markets, fixed income, cryptocurrencies, and the like, as well as the housing market. So if you want to stay up to date with the chat, if you scan the QR code and punch in your email, you will be signed up to receive that free investing newsletter, in which case we've been warning about this SPAC mania to stay far, far away for probably the last 6 months now. So I think this is all coming to a head, and Goldman Sachs knows it. And I think that's why they're trying to get out of Dodge before they face any sort of litigation. And, it really reminds me of the movie Margin Call. I'm not sure if anybody's watched that movie. I could be getting the name of the movie wrong, but I believe that's the movie with Kevin Spacey. And it was about the 2008 financial crisis. And in that movie, Kevin Spacey walks up to his managing director and he says, "We can't sell this stuff to these clients. It's garbage. The products are garbage." And to which his managing director says, I guess I'll paraphrase it here. He's like, "We're not selling garbage. We are selling products to willing buyers." So I think that's what Goldman Sachs is doing, willingly selling garbage. Photos from around New York. She says, "Yep, Margin Call on Netflix." Ooh, it's already midnight. It's 11:58. That means we have to start heading back uptown. I guess I'll bring you guys along for the ride. Carol says, "Love the Empire State Building in green." Yes, supposedly it's green for Robin Hood something, I think. Matt Bob says, "Margin Call is a great movie." Indeed it is. Mr. Ming says, "Midnight, not a sound from the pavement." Good to see you, Mr. Ming. So tomorrow, a little bit of news. We may not be streaming tomorrow. I will be doing some traveling, so I'm not so sure we will be able to get in a live stream. So if we do not stream tomorrow, we will be live Wednesday. And I think Wednesday is the most important day on the street because that is when we get the all anticipated CPI numbers. So we will see if inflation is hopefully starting to peak in the United States. And if that is the case, I think the Federal Reserve will potentially adjust course and maybe not raise interest rates as aggressively as they are raising them. Last week we saw a 50 basis point rate hike from the Federal Reserve. Fed Chair Jerome Powell did signal to the market that they will not be considering a 75 basis point rate hike. Well, I was going to show the Empire State Building, but this building is blocking it. Shot by Scott. Zotom, you always say that. You'll do 2 streams tomorrow. Yeah, we may do 2 streams tomorrow, potentially. Yeah, but Shot by Scott, I'll be back near your way. So hopefully the weather will be pretty nice down there in Miami by the time I arrive. Brian says, "Tom, have you seen the movie Boiler Room?" So I have not seen the whole movie Boiler Room, but I've seen clips of Boiler Room. I've seen clips. William Martinez Digital says, "Hello from the Dominican Republic." Welcome, everybody. So I also think Techno Pink is from the Dominican Republic as well. So good to see everybody from the Dominican Republic. Strider 1239 says, "We're selling to willing buyers at the current fair market price so that we may survive." Yeah, that is the famous quote. And I think you're seeing the same thing in the SPAC market. The same thing. They sold all of this junk, all of this SPAC nonsense to investors, and they know it's garbage, they know it's junk. I'm not sure if you guys ever ventured back to look at or watch some of the bankers in 2008 testify before Congress. It was just really, really embarrassing to watch that. Robert, I have not. Really? Shot by Scott says it's been so hot, over 100 on the heat index the past few days. No way. So I thought that Miami has never been over 100 degrees ever. Hey, Ramsey says, hey Tom, what's up? Good to see you, Ramsey. Hope you're well. Hope you're doing good. But that's what I like it. I like it hot. I like it 100 degrees. Hey, Marcelo says, okay, Tom, have a good night. We will see you on Wednesday with the new classroom. Thank you, Marcelo. Much appreciated, my friend. Matt Bob, tomorrow we're probably going to get going around 7:30. Probably around 7:30 tomorrow. Dr. Longus says The Big Short is also a good movie. Yeah, The Big Short is fantastic. That is with I keep forgetting his name. Very famous actor from The Office. Very good in that movie. Hey, David says, good to see you again. Good to see you too, David. Carol H says, I'm going to sleep now, everybody. Good night, Tom and everyone. Thank you, Carol. Well, hopefully you had a good start to the week and a fantastic Mother's Day weekend. Dr. Longus says, Steve Carell. You're right. Hey, Martin Lucas says, good morning here in Poland. Have a great day. Good sunrise. Very cool. Good to see you still in shape, Tom. Thank you, my friend. Craig Foster to Steve Carell. So I'll take you guys back to 58th Street, 57th Street with me. But if you guys are enjoying the stream tonight, feel free to leave a like on the video and subscribe if you are new. We usually go live about 5 days a week between New York City and Miami. So if you want to see more live streams, feel free to join us as we pass Bryant Park. We got the construction workers working overtime. Shot by Scott says, Tom, the ocean breeze will never let the thermostat get over 100, but the humidity via the heat index definitely puts it over and of it often, yeah. Yeah, I'm just a big fan of the heat and humidity. I don't know why, but I'd much rather have it 100 degrees and sunny out than 40 degrees and windy and rainy. But Shot by Scott, I was reading that supposedly this year, it's supposed to be one of the worst hurricane seasons on record for southern Florida. Is that true, or what are your thoughts on that? I'd be curious to see what you think. Victor is here. Says, hello, everybody. Good to see you. Victor, welcome. Ibrahim Azam is here, joining us from California. Good to see you, Ibrahim. We're walking up 6th Avenue, crossing 41st Street now. And we're overlooking Bryant Park. Hey, Alan Wilson is here. Says, Tom, I'm glad you're running late. I almost missed the Billy Joel birthday edition of your stream. Did you visit him tonight? We did not. Alan Wilson, we did not get a chance to. We started really late. We started at about 10:30 at night. But it's good to have you here, Alan Wilson. Nicole is here. Happy Monday, Tom. Right back at you, Nicole. Hopefully you had a good weekend. Mother's Day weekend. For those of you who are joining, we were talking about SPACs. So if you type !SPAC in the chat, Goldman Sachs has officially exited the frothy SPAC market due to potential new regulatory oversight. We've been talking about this for a while. Hey, Joe Hernandez, what's up? Joe Hernandez, long time no see, man. Says we will have a very active season this year because it's a ninja year, or a Nina year. Good to see you, Joe Hernandez. Yeah, hopefully we don't get too many hurricanes. Not a big fan of the hurricanes. Hey, DeLargo, thank you so much for the 50 Mexican. Thank you so much. This is multi-year bear market for crypto thoughts. I think it's possible. My main target for Bitcoin specifically is that 200-week moving average. And I pinned the chart on Twitter. So if you follow @WalksWallStreet on Twitter, you could see all of my my thoughts on that. But I think we're probably going to head to the 200-week moving average. DWG says, great walk, Tom. Good to see you, DWG. Welcome. Fetty Ower says, great streets. Can't wait to be there. Yeah, I mean, especially now. I mean, it's midnight on 42nd Street right here. And it's pretty quiet for a Monday night. But if you look directly ahead, you could actually see the ball that they drop on New Year's here. Iowa Oaks, high probability that at least one tropical storm or hurricane will make landfall here. Wow. 16 to 20 named storms this year, potentially. That's a lot. You know, it seems like as the years have progressed, we've seen stronger and stronger storms. Jeans of South Florida has been spared by hurricanes since 2005. Hey, Mark Francis says it's a normal year for hurricanes, is what I read. Yeah, hurricanes are a disaster, so hopefully we don't have any of that. Hey, Dr. Longus says, hey, Tom, I lived in Clearwater, Florida for 5 years. If a hurricane comes, just take a ride to the mountains for a few days, it'll pass. That's true. But sometimes I hear horror stories that the power is out for weeks on end. I mean, hurricanes are no joke. You know, off topic, but have you guys been seeing a lot of the tornadoes that has been going on in Middle America? Horrible, horrible, heartbreaking stuff to see. I mean, it just goes to show the power of Mother Nature. It's almost unbelievable to watch. Yeah, Western Mass Dave says that's what they've been saying. Everything goes in cycles. Photos around New York says Sandy knocked out power for a week, but more than a week. In Long Beach, was totally decimated. South Shore, Long Island was totally decimated. James says Mexico Beach in the Panhandle of Florida got flattened by a hurricane a few years ago. Wendy England says fire, winds and floods, all not good. You know, one of the things is we haven't been getting that much snow in New York. I remember some of the snowstorms we used to get here used to be crazy, like 3 feet, 4 feet of snow, wild. We haven't really had that as of late. Wow, David says, Tom, I live in Dallas near Tornado Alley. Well, please stay safe. NMB045 says the 1998 ice storm in Montreal, we had no power for 2 weeks. Whew. Yeah, that's definitely not good. I didn't know Dallas gets tornadoes. Yeah, John says hurricane, no good, agreed. Hey, Arturo says, hello, my friend, good to see you, Arturo. Welcome. So does anybody know what futures are doing, just for curiosity? They probably are green. I wouldn't be surprised. Ibrahim Azam says, Tom, are you happy that New York City has been getting less snow? Yes. Extremely, extremely happy, because, you know, the thing in New York, it's not about the snow that's horrible. It's 2 or 3 weeks after you get the snow is what's horrible, because when it's coming down, it's actually not bad. It kind of looks nice. But the weeks after, anytime you try to cross the street, it's literally like a lake of ice water. So everything here will be just a total lake of ice water. Can't cross the street. Your feet get soaking wet. It's like a lot of slush. So it's not really the snow that's bad. It's sort of like the aftermath of the snow. It's a little bit horrible. Yes, Samantha R is like the slush is terrible. Yeah, but I'm excited to be back in the sun. Hopefully by the time I land in Miami, I'm going to be there for about a week. You know, on May 25th, I got to be back here. Well, I'm not going to be in New York. I'm going to be in Atlantic City, New Jersey. I have to sponsor some sort of a conference. So I'll probably be back on the 24th or something like that, but I got to go to Atlantic City. I really don't want to go to Atlantic City, New Jersey, to be totally honest, but you got to do what you got to do, I guess. Ibrahim Azan says, I have had too much sun. Yeah, well, Ibrahim, you're in California. I mean, here, you know, Mother's Day weekend in New York was pretty rainy. Kumar says, do you do a live walk from New Jersey? I don't think we've ever done a live walk from New Jersey. I don't think so. We may have done one, but I don't think so. So no, we don't. But good to see you, Kumar. Welcome. Hey, Jared says, how is the weather in New York City tonight? Weather's pretty decent. It's just windy. The wind is unreal here tonight. But everybody, we will be calling it a night. And if I don't see you guys tomorrow, we will see you on Wednesdays. So Wednesday is going to be an important stream. We are going to be talking about the CPI numbers that are coming out. So that could potentially signal if inflation has peaked in the United States. So we will definitely be streaming Wednesday. I'm not so sure about tomorrow because I will be traveling, but we will be back 8:30 p.m. Eastern Standard Time for the CPI stream. So if you guys enjoyed the stream tonight, feel free to leave a like on the video. Subscribe to the channel if you are new. If you type !SPAC, S-P-A-C in the chat, that is the topic for tonight's stream, where we talked about Goldman Sachs is officially exiting the SPAC market now that the SEC and other regulators are really cracking down on the disclosures and the compliance aspect of SPACs. And we've been talking about this for a while to sort of stay away. But we will see you guys in the next one. So thank you all for joining. It's been a pleasure on this very windy night in Manhattan. And I will leave you guys off with this. If you want to sign up to receive the Behind the Street newsletter for free, which is a investing newsletter that I write every single Tuesday for everybody, if you scan the QR code on your screen, punch in your email, you will receive the Behind the Street newsletter, where we cover not only the U.S. equity market, but also emerging markets and fixed income. So thank you, photos from around New York, Samantha R. Tinman, Ibrahim Azam, John Fredex, and to the Mighty Bull, have a good night wherever you are, because there's always a bull market somewhere, and you just need to know where to look. And I'll see you guys right back here on Wednesday.